everybody, Jake here with Jake Wu Market Research to go over the free version of the weekend update. Only we'll be doing SPY and QQQ, and then for Twitter subscribers, that will be a much longer video looking at not only these charts in more detail, looking at gaps, looking at invalidation levels, but also looking at some trade ideas going into the week ahead. So if you are interested in the Twitter subscription, it's only $10 a month. I'll put a link in the YouTube description. So if you just click that link, if you're on a computer, you'll be able to sign up directly through that link. If you're on your phone, you just need to go to my Twitter profile, which is also in the description, and click subscribe within the top of my Twitter account page. So let's jump into SPY, starting on the daily chart. We'll also do a weekly candle, and then we'll do a daily and a weekly candle for the Qs as well. But the main thing that I wanted to focus on here is simply just this ascending triangle here that's been forming for quite some time. And so we finally got the breakout. We got a little bit of a fake out here on Tuesday, the first day of the week, pulled back a little bit, and then Thursday and Friday were just huge moves to the upside. So the target that was mentioned for subscribers last weekend was hit to the upside. We hit this general zone. I do think there's still a little more upside left until we definitely start getting into these August highs from 2022. So really, up until around 31.75, I think caution is definitely warranted. However, if you look at the MACD is starting to finally make its move to the upside. And you can use the MACD very similar to how you can with an RSI or anything that oscillates, right? So if you have a general idea of what levels the MACD generally kind of tops out at, you can see right now we're currently on the MACD right around 3.4, 3.5. However, you can see the MACD a lot of the time crests around 5.75 up to 6, and you can see it even crested up here back in August 22, way up at around 8 or 9. So there is definitely still room for the MACD to move up. So that tells me that we're definitely possibly just in the beginnings of this breakout. We just broke out on this ascending triangle setup. You can see here pretty much since February, we have been trading at a pretty tight high range, if you will. So we really haven't been able to get out of the 415 up to 420 zone for multiple months. And so the fact that we're finally breaking up tells me that we could resolve much higher. And as I mentioned, I'll be going over more details on the upside targets if we do break above 31.75 in the subscriber video coming out this weekend. So all in all, MACD is just starting to really start to curl up once again. You've got the ascending triangle breakout. Wouldn't be shocking to get a little bit of a breather here in the next week. So not really expecting another huge week as the market is potentially digesting some of that supply coming in from people who may be still holding from August who are now just getting back to break even. So all in all, definitely an area where a breakout is definitely occurring, but caution is warranted up until around 31.75. Now on the weekly chart, you can see here that this setup that I've been posting publicly on Twitter now for weeks, if not months, is finally starting to play out. If you remember, I had the all-time high anchored VWAP pretty much as our main resistance zone. We finally flipped above that area in mid-April, and we were kind of just at this SR flip zone, this previous resistance now acting as support over the last several weeks. And then finally, over the last 3 weeks in May, we did start to move up. So this is a great example of sell in May, go away. That's just a saying. That doesn't mean every single May you're going to get a move down. You can see here that it's been an extremely strong May and even a start to June so far. I do these videos on Fridays, so June 2nd, we're only 2 days in, and we've had a very strong last 2 days. You can see the volume shelf acted as a nice launch pad for price, something that I really like to hit on as much as I can because these setups can really produce some huge moves, especially when you don't have a lot of volume above. For example, here you can see once we broke out, there wasn't a lot of volume acting as friction for price. So that's how we were able to move pretty quickly and pretty aggressively through this general area up to this SR flip zone from 427.25 up to around 431.75. So Same thing on the weekly chart. We're looking at different time frames, but you can see we're starting to definitely move into these August highs, these previous support zones that we saw even before the bear market. So this area from October of 2021, you can see that multiple times this area acted as definitely support back in 2021 for September, but you can see it acted as kind of a line of best fit for February of 2022. And then finally, we broke down through it before continuing down and retesting this area in August of 2022. So pretty much my point is, if we can get above this 3175 zone, especially on the weekly chart, I think we are definitely going to be testing the 440s to 450s in the coming months, especially summer. Don't look at volume simply because summer months are always low volume. However, a lot of the time you grind up on low volume. You do not need volume to move up. You don't make money on volume when you're selling a stock. You make money based on the price. So focus on price. Volume is great, but using volume as a function of price is a lot more important than using volume as a function of time. That's why I really don't use volume on the bottom of my chart. I don't need it. I already know what price is telling me. And the only time you really want to look at volume is maybe on a breakout. But even then, it can be deceiving. You can have low volume breakouts and continue for literally 10, 20%. So volume, yes, while it has its position in the market, it is not that important for me as a function of time. It's more important as a function of price, and that's why I have the volume profile pulled up versus the volume bars on the x-axis, which account for how much volume came in at different weeks, different days, whatever time frame you're on. Going into the Qs, we will quickly see that there's not a lot to go off of here. The only thing that you can really go off of here on such a melt up like we're having is simply a gap. So we do have a gap above here that is pretty much from April of 2022. You have this gap down. It fills at 361.10. And a lot of the time, these gaps can act as resistance zones. So pretty much up until around 361.10, that is definitely an area that you want to keep an eye on. Notice here that if we were looking at kind of these thresholds that I was talking about for the MACD, we are starting to near some of these areas where we do have kind of this cresting formation. So honestly, at this point, I think it would be pretty healthy for a pullback in the Qs. I think 361 or I'd say 362 to 365 is going to be at least a short-term kind of top here. And I think there's going to be a lot of rotation into some of these names that haven't moved. A lot of those names, as I mentioned, I will be focusing on in the weekend video for subscribers, talking about names that haven't moved yet. Laggards. This is definitely a market where you want to start looking at the names that are lagging and haven't moved yet, because that's likely where money is going to funnel into and rotate into when we do get a pullback in some of these huge mega cap names. On the weekly chart, you can see here that we're also running into this previous kind of support zone that we saw before the bear market, which is from October of 2021. You've got this support zone. As I mentioned in the previous chart, you kind of have almost this line of best fit. Price did not respond to it perfectly back in March of 2022. It did very well back in January of 2022, but you did have a little bit of an overshoot here. So pretty much anywhere from around 354.25 to 358.50 is definitely more of an area you want to look at. The only reason I have 361.10 mentioned is because that's a gap, and a lot of the time price likes to gravitate towards those gaps. So you may see an overshoot as well here going into the week ahead. But this is now the 6th green week in a row. It makes sense for the market to start digesting some of this supply that we're likely going to see, not only from profit takers, but also people who may have been stuck in positions for a while and they're finally back to break even. You get some break even supply, and that's how you can really get some resistance zones created. So I definitely think there's reason for caution in the Qs. I think you're definitely going to see the baton kind of handed off to different sectors and different indexes moving forward into the rest of the summer. And as I mentioned, I'll definitely be focusing on that for the weekend update for subscribers, which will be posted this weekend. So hopefully this video is helpful, just getting a general idea of what the markets are looking like as far as SPY and the Qs go. As I mentioned, if you do want to check out the subscription, it's $10 a month. If you don't like it, you can easily cancel. But that is really where a majority of my content is being posted now, through my Twitter subscription. And I will put those links in the description if you want to check them out. Thanks so much for watching, and have a great weekend.